Welcome back to Smart Stock Sam. There's big news on this stock recently, and market is reacting as expected. But let's slow down and focus on the facts and see how they are shaping the narrative. I'll cover what's real, what's noise, and what it could mean next. For quick updates like this, subscribe and tap the bell to catch every market move on time. Alright, here we go.
Most investors are looking in the rearview mirror, chasing Nvidia's 2023 gains or arguing over whether Microsoft is overvalued. But while the retail crowd is distracted, the smart money just identified an asymmetric growth play that is mathematically outperforming the tech giants on a relative scale. It is Saturday, January 17, 2026, and if you haven't been watching Rezolve AI, ticker RZLV, you've missed a 110% move in the last 30 days. But here is the secret. That move was just the warm-up. This week, Rezolve AI moved from being a speculative what-if to a fundamental how high? We are looking at a company that just confirmed a growth trajectory 775% steeper than its peers, backed by a revenue roadmap that most Silicon Valley startups would kill for. In this analysis, we're going deep into the data. I'm going to show you why the profitability milestone announced yesterday is the de-risking event of the year, why the $500 million exit rate revealed earlier this week is causing a Wall Street stampede, and exactly how the price chart is setting up for a massive breakout come Monday morning. This isn't just a stock update, this is a masterclass in identifying the next AI unicorn. Let's start with the data that broke the internet earlier this week. On January 13th, Rezolve pulled back the curtain on their 2026 financial guidance, and the numbers were, frankly, staggering. The company is projecting $350 million in revenue for 2026. Now, to an amateur, that's just a number. To an analyst, that's a revelation, because Rezolve is coming off a 2025 where they did approximately $40 million. We are looking at a year-over-year growth rate of over 775%. Compare that to Nvidia's hyper-growth phase. Compare that to the SaaS giants. Rezolve is operating on a different plane of existence. But the real alpha is in the ARR, the annual recurring revenue. They are forecasting an exit rate of $500 million by the end of 2026. When a company has that kind of visibility into their cash flow, it means their product, the Brain AI, isn't just a one-off sale. It's an infrastructure play. They are becoming the plumbing of Agentic Commerce. The market began pricing this in on Tuesday, and we saw a massive surge in institutional volume, over 30 million shares, indicating that the big boys are finally building their positions. Now, you have to ask, how? How does a sub-$5 stock scale that fast? The answer lies in a term you're going to hear a lot this year: Agentic Commerce. Most AI, like ChatGPT, is passive. You ask it a question, it gives you an answer. Rezolve's AI is active. It doesn't just talk, it executes. It finds the product, negotiates the intent, and closes the transaction within the conversation. But here's the expert-level insight you won't find in the headlines. Rezolve isn't trying to build the world's infrastructure alone. They have formed a triple-threat alliance with Microsoft Azure and Google Cloud. Think about the leverage here. By integrating directly into the world's two largest cloud ecosystems, Rezolve has a frictionless path to every retail brand on the planet. They aren't knocking on doors, they are the upgrade that Microsoft and Google are offering to their enterprise clients. This is how you go from $40 million to $350 million in 12 months. You don't build a sales force, you become the software that the world's biggest sales forces are already selling. If the revenue guidance was the rocket fuel, yesterday, Friday, January 16th, was the ignition. The biggest bear case against RZLV has always been the cash burn. Investors were terrified that the company would run out of money before it hit the big time. But yesterday, management dropped the hammer. December 2025 was the company's first ever month of profitability. This is a monumental shift in the risk-reward profile. In the world of small-cap AI, profitability is the great divide. It means the company is no longer at the mercy of high-interest debt or dilutive capital raises to keep the lights on. They are now self-sustaining. When you combine a 775% growth rate with a profitable bottom line, you don't have a penny stock anymore. You have a growth comp that should be trading at a massive premium. This is why H.C. Wainwright just slapped a $12 price target on the stock, and Cantor Fitzgerald is screaming from the rooftops at $8. From our current levels near $4.70, that is an upside potential of 70% to 150%. Let's get tactical and look at the chart. If we look at the 1-month trend, our RZLV has been in a perfect bullish staircase. In mid-December, we were bottoming out at $2.20. Since the $500 million ARR news on the 13th and the profitability news yesterday, we have seen a vertical breakout. But here is what I'm watching as an analyst: the volume profile. We didn't just move up on hope, we moved up on 32 million shares of daily volume. That is institutional accumulation. When a stock doubles in a month on record-breaking volume, it creates what we call a golden floor. Currently, $4 has transitioned from a heavy resistance ceiling into a rock-solid support floor. As long as we hold above $4, the trend is parabolic. On Monday, I'm looking for a retest and go. We might see some short-term profit taking after Friday's surge, but any dip toward the $4.30 range should be viewed as a high-probability entry point. The next major target? $6. There is a massive liquidity gap between $5 and $8. Once the momentum traders realize the cash burn era is over, this stock could fill that gap faster than you think. So, what is the final verdict? Rezolve AI is no longer a secret. The cat is out of the bag. Between the $500 million ARR exit rate and the move into profitability, the fundamental floor of this stock has shifted higher by at least 200%. Is it too late to buy? In my professional opinion, we are still in the first inning. If the $12 analyst price targets are even remotely accurate, the current price is a gift. You are getting Nvidia level growth at a fraction of the valuation. But remember, high growth comes with high volatility. Don't chase the green candles, play the levels. Watch that $4 support, keep an eye on the 2026 revenue milestones, and remember that in the AI race, the infrastructure always wins. I want to know your strategy. Are you holding our RZLV for the $12 target, or are you playing the short-term swing to $6? Let's debate it in the comments.
Alright, that's the update. If you want more quick fact-based insight like this, subscribe and tap the bell icon so you don't miss the next one. Drop your thoughts in the comments, and I'll see you in the next update on Smart Stock Sam.